Gaps. A gap refers to the area on a chart where no shares were traded. Gaps can appear in an 1. Uptrend, when the lowest price of the current trading period is above the highest price of the previous trading period. 2. Downtrend, when the highest price of the current trading period is below the lowest price of the previous trading period. Gaps typically occur when a piece of news or an event causes extraordinary buying or selling interest developing while the market is closed. It results in the price opening significantly higher or lower than the previous day's closing price. Depending on the kind of gap, it could indicate either the start of a new trend or a reversal of a previous trend. There are 4 types of gaps, excluding the gap that occurs as a result of a stock going ex-dividend. 1. Common gap. 2. Breakaway gap. 3. Runaway gap. 4. Exhaustion gap. Common gap. It normally occurs in thinly traded markets, or within a trading area, or price congestion pattern, when trading is bound between support and resistance level on a short span of time, and market price is moving sideways. Here price do not break out from a trading range, unlike a breakaway gap, and are quickly filled, unlike a runaway gap. Common gaps typically have low volume. Common gap is also known as an area gap, pattern gap, or temporary gap. Breakaway gap. Breakaway gap occurs when prices break away from an area of congestion or trading range. Breakaway gap develops at the beginning of a move. 2 types of breakaway gap are: 1. Upside breakaway gap, when the price gaps above the resistance. Volume is noticeably higher than usual. 2. Downside breakaway gap, when the price gaps below the support. Volume may or may not be abnormally high. Runaway gap. Runaway gaps develop in the middle of a move, be it up or down. Runaway gaps may occur, for example, when the price of a security suddenly doubles, when it has been increasing, or halves when it has been decreasing. Runaway gaps are also called measuring gaps, as they occur halfway between a previous breakout and the ultimate duration of the move. It can be expected that prices will move about the same percentage amount from the gap to the end of the move, as it has from the beginning of the move to the gap. Runaway gaps are accompanied by moderate to relatively high volume. Exhaustion gap develops at the end of an uptrend or a downtrend. Is the 3rd or 4th gap after a series of runaway gaps. Is accompanied by high volume. Exhaustion gaps are of 2 types. 1. Bullish exhaustion gap occurs at the end of a strong downtrend. Buy or go long. 2. Bearish exhaustion gap occurs at the end of a strong uptrend. Sell or go short. Island reversal. After exhaustion gap, a section of chart is isolated from the rest of the chart by a breakaway gap, which appear at approximately the same horizontal price level. This pattern is known as island reversal. Thank you for watching this video. Please click the subscribe icon and then tap the bell icon to get notification for new video of my channel.